Good day everyone, I am Aira Linga of BS Accountancy 2 and today I am going to discuss the topic entitled Interim Financial Reporting. So before we start, let me give you the objectives of our lesson. First, to understand the nature of interim financial reporting in contrast to annual financial reporting. Second, to know the basic principles of interim financial reporting. Third, to identify the components of an interim financial report. And last, to be able to prepare and present comparative interim financial statements. Now let's proceed to our lesson. First, let me give you the definition of what is interim financial reporting. So interim financial reporting is the preparation and presentation of financial statements for a period of less than 1 year. Interim financial reporting may be presented monthly, quarterly, or semi-annually. But quarterly interim reports are the most common of these three. However, publicly traded entities are encouraged to provide interim financial reports at least semi-annually, and such reports are to be made available not later than 60 days after the end of the interim period. So, interim financial reporting is under PAS 34, which prescribes the minimum content of an interim financial report and the principles for recognition and measurement in complete or condensed financial statements for an interim period. Frequency of interim reporting. PAS 34 does not mandate which entities are required to publish interim financial reports, how frequently, or how soon after the end of an interim period. Now let's proceed to Philippine jurisdiction. The Securities and Exchange Commission and the Philippine Stock Exchange require entities covered by the reportorial requirements of Revised Securities Act to file quarterly interim financial reports within 45 days after the end of each of the first 3 quarters. The SEC also requires entities covered by the Rules on Commercial Papers and Financing Act to file quarterly financial reports within 45 days after each quarter end. Entities that provide interim financial report in conformity with PFRS or the Philippine Financial Reporting Standard shall conform to the recognition, measurement, and disclosure requirements set out in the standard. So we have two views on interim financial reporting. The first one is the integral view and the second one is the independent view. First, let me discuss integral view. The integral view is that each interim period is an integral part of an annual accounting period. Under the integral view, annual operating expenses are estimated and then allocated to the interim periods based on the forecasted revenue or sales volume. In other words, costs incurred which clearly benefit the entire year are allocated to the interim periods benefited. So it is allocated to the interim period it benefits. Estimation and allocation are necessary to avoid creating misleading fluctuations in interim period income. Using integral view would result to interim income, which would be more indicative of the annual income and thus useful in predicting future operations and making informed decisions. Now let's proceed to independent view. Independent view is that each interim period is considered a discrete or separate accounting period with status equal to a fiscal year. Thus, no estimations or allocations are made for interim purposes unless such estimations or allocations are allowed for annual reporting. The same expense recognition rules shall apply as under annual reporting and no special interim accruals or deferrals are permitted. In other words, annual operating expenses are recognized in the interim period when incurred irrespective of the number of interim periods benefited, unless deferral or accrual would be allowed in the annual financial statements. So, which view is followed in practice? Well, PAS 34 on interim financial reporting does not mention about the two views of integral and independent view. Essentially, the standard adopts a mix of the integral and independent view. So, the standard uses both the integral and independent view. Components of an interim financial report. PAS 34 paragraph 8 provides that an interim financial report shall include at a minimum the following components: condensed statement of financial position, condensed statement of comprehensive income, condensed statement of changes in equity, condensed statement of cash flow, and selected explanatory notes. So, paragraph 8A provides that an entity can present items of profit or loss in a separate condensed income statement. BAS 34 allows an entity to publish a set of condensed financial statements or complete set of financial statements in the interim financial report. Nothing in the standard is intended to prohibit or discourage an entity from publishing a complete set of financial statements rather than condensed financial statements and selected explanatory notes. So condensed means that each of the headings and subtotals presented in the entity's most recent annual financial statement is required, but there is no requirement to include greater detail unless this is specifically required. Now let's move on to the disclosure of compliance with PFRS. PAS 34 paragraph 19 provides that if an entity's interim financial report is in compliance with Philippine Financial Reporting Standard or PFRS, such fact shall be disclosed. An entity shall not describe an interim financial report as complying with PFRS unless it complies with all of the requirements of each applicable Philippine Financial Reporting Standard, so it shall conform and comply with all the possible applicable PFRS to be called that it uses interim financial report based on PFRS. Now, selected explanatory notes are designed to provide an explanation of significant events and transactions arising since the last annual financial statement. PAS 34 assumes that financial statement users have an access to the entity's most recent annual report. As a result, the standard reiterates that it is a superfluity to provide the same notes in the interim financial report that appeared in the most recent annual financial report. Examples of disclosures required: write-down of inventories to net realizable value and the reversal of such a write-down, recognition of a loss from the impairment of property, plant, and equipment and intangible assets, and the reversal of such an impairment loss, the reversal of any provisions for the cost of restructuring, acquisitions and disposal of items of property, plant, and equipment, commitments for the purchase of property, plant, and equipment, litigation settlements, corrections of prior period errors in previously reported financial data, any debt default or any breach of a debt covenant that has not been corrected subsequently, related party transactions, changes in economic circumstances that affect fair value of financial asset and financial liability, change in classification of financial asset, and contingent liabilities and contingent assets. Now let's proceed to presentation of comparative interim statements. So, in presentation of comparative interim statement, it includes statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and statement of cash flow. First is the statement of financial position. It includes statement of financial position at the end of the current interim period and comparative statement of financial position at the end of preceding year. Income statement. It includes 4. Income statement for the current interim period, income statement cumulatively for the current financial year to date, comparative income statement for the comparable interim period of the preceding year, and comparative income statement cumulatively for the comparable financial year to date of the preceding year. Statement of comprehensive income. It also includes 4. Statement of comprehensive income for the current interim period, statement of comprehensive income cumulatively for the current financial year to date, comparative statement of comprehensive income for the comparable interim period of the preceding year, and comparative statement of comprehensive income cumulatively for the comparable financial year to date of the preceding year. Statement of changes in equity. It includes 2. Statement of changes in equity cumulatively for the current financial year to date, and comparative statement of changes in equity for the comparable financial year to date of the preceding year. Last is the statement of cash flow. It also includes 2, which is the statement of cash flows cumulatively for the current financial year to date, and comparative statement of cash flows for the comparable financial year to date of the preceding year. Now, to further explain the presentation of comparative interim statement, I have 2 illustrations. First is half yearly. So it goes, if an entity publishes interim financial reports half-yearly or commonly known as semi-annually, the following comparative financial statements are presented on June 30, 2021. So, statement of financial position on June 30, 2021 and December 31, 2020. Statement of comprehensive income 6 months ending June 30, 2021 and June 30, 2020. Statement of cash flow 6 months ending June 30, 2021 and June 30, 2020. And statement of changes in equity 6 months ending June 30, 2021 and June 30, 2020. So, this comparative financial statement presented on June 30, 2021 is based on our discussion earlier, which is the presentation of comparative interim statement. So as you can see, it follows what is in the discussion. One example is the statement of financial position. In the presentation of comparative income statement, it says that statement of financial position includes statement of financial position at the end of the current interim period, which is June 30, 2021, and comparative statement of financial position at the end of the preceding year, which is December 31, 2020. Now let's proceed to quarterly. If an entity publishes interim financial reports quarterly, the following comparative financial statements are included in the quarterly interim financial report on June 30, 2021. First, statement of financial position on June 30, 2021 and December 31, 2020. Statement of comprehensive income 3 months ending June 30, 2021 and June 30, 2020. 6 months ending June 30, 2021 and June 30, 2020. Statement of cash flows 6 months ending June 30, 2021 and June 30, 2020. And last is statement of changes in equity 6 months ending June 30, 2021 and June 30, 2020. So as you can see, the illustration for semi-annually and quarterly are almost the same, except for the statement of comprehensive income, which has 3 months ending and 6 months ending. So it is because in statement of comprehensive income, there is for the current interim period, which is the 3 months ending June 30, 2021. And there is also the cumulatively for the current financial year to date, which is 6 months ending June 30, 2021. So that ends our part 1. Thank you and God bless.